Hello traders and welcome to another video review. Today is Friday, April 4th, 2025. Let's take a look at the economic calendar for Friday. Asian session was quite calm, with the household spending Japan as the only medium important data. As you can see, the household spending deteriorates from 0.8% to minus 0.5%, which is slightly better than the expected of 0.9%. Unemployment rate in the Switzerland stays at the level of 2.9%. German factory orders are in the level of 0%, which is not actually good, but it's still better than the last reading of minus 5.5%. CPI in Switzerland 0.5%, and then global construction PMI from the UK is still expected to be released at 10:30, and that's about the London session. Now the US session, obviously, as in the every first Friday of the month, we got the non-farm payrolls data scheduled for release at 2:30, together with the average hourly earnings, unemployment rate, participation rate, and private non-farm payrolls. Non-farm payrolls are expected to decrease from 151,000 to 137,000. Very, very important data release ahead of us. Please stay focused. Employment change and unemployment rate from Canada is scheduled for release at 2:30 as well. The Fed Chair Powell will give a speech at 5:25, and the Fed Weller will give a speech at 15 to 7 o'clock. At the end of the day, we got the data from the Barker Hughes oil rig count and the ORIG and the total rig count. Both of them are scheduled for release at 7 o'clock. So very, very dynamic second part of the trading day. So without any further ado, let's take a look at the charts. We start with euro dollar. Euro dollar 4-hour chart hits the target for the wave 3 exactly as expected. So we hit the wave 3 high, and now we move again lower, starting the big wave 4 in that cycle. So everything goes according to our scenario. So you can see this scenario here. Now let me just remove the Fibonacci's, because we don't need this Fibonacci's anymore. Now we got only our wave count. So 5 waves to the upside in wave 3 are done. There is even a bearish divergence between the internal wave 3 and internal wave 5. Now the wave 4 should be made. We will see how this wave 4 will be developed. As you can see, the momentum is still strong. The momentum still is still on the daily time frame chart positive. When the wave 4 is done, we should wait for the wave 5 to be made. So nice movement in the euro, exactly as expected. The target for the wave 4 might reach as deep as 1.0733. This is the previous wave 4 area low. Let's take a look at the US dollar to the Japanese yen, and the US dollar to the Japanese yen broke way below the trend line, way below the 100 periods moving average on a 4-hour time frame chart. They broke below the technical support at 146.54. The local low was made at the level of 145.21 during the extremely oversold market conditions. Now we see some sort of the bounce higher. So let me just switch to daily again, and you can take a look here at this level. It is now the technical resistance together with the 148.18. So finally, after the false breakout, this breakout was false, now we know it, but when the bulls broke above the trend line, they had the chance to rally, but they failed to rally higher, and after a few days they basically reversed lower straight on. So now there you go. We will have to move this line here. So now we have this technical resistance. Here's quite important technical resistance, and the market is seen to test this resistance right now, ahead of the NFP payrolls data release. So everything is going again according to our scenario. S&P 500 deteriorates even further. A local low was made at the level of 5,345. As we move way lower, you can see the bearish movement below the extremely oversold market conditions. However, right now we can see the bullish divergence forming on the 4-hour time frame chart. Nevertheless, it is clear that there is a bearish pressure on the S&P 500 these days. So we should see further movement to the downside on the S&P 500. So let's leave it like that. Gold again deteriorates very briefly according to our plan. Deteriorates exactly to the level that we expected, the high of the wave 3, 3,057 dollars, and bounces. So the first wave to the downside, wave A, might be completed on this level. So we still wait for the wave B and wave C to be done. There is still room to the downside towards the extremely oversold conditions. There is still room to the downside below the level of 50. Now the market is below the level of 50 already, at the level of 44 points. So the outlook for the gold remains bearish as well. Next target should be somewhere around the previous wave 4 low, which is $3,000, and that's about the simple correction on the gold. Please remember that this correction might evolve into more time and price consuming pattern, more complex consuming pattern. Okay, so what else could react on the NFP payrolls? Bitcoin, of course, could react. However, as you can see, the volatility of the Bitcoin, expect the Friday the 2nd, is really low these days. We got the movement below the trend line. That's important, below the 100 periods moving average, and we tested again, which is again important, 81,113. This is the level that provides the technical support, and the market has been seen testing this level a few times before, which is why you can see that it's kind of an important level. Market recognized this level because yet again we have the test of this level and a bounce, significant bounce higher. Possibly we are aiming the 100 periods moving average. Let me just move slightly this moving average, this trend line a little bit lower, so we know for sure that we are below the 100 periods moving average. We are below the trend line. Possibly somewhere here there will be a test of the trend line of the moving average. But then if this test is basically again failed, the market might be rejected, and then it's very important to again watch the level of 81,113. There might be some sort of the possible bounce from this level, but in the case of a breakout, we got at least 3 more levels down towards 76,562, which is the key technical level for the bulls before we hit the demand zone. Demand zone is the almighty zone here for the long-term uptrend on a Bitcoin. Any breakout below this zone is very bearish. Interesting daily candle was made 2 days ago. You can see this false breakout above the trend line and then return below the trend line and close below the trend line as well. So the overall situation on the Bitcoin is still bearish. Even the momentum is still below the level of 50, and any rally above the momentum is more temporary than something that can be sustained in the long term. We got few technical supports, but please remember, any failure So means any breakout below this technical support, especially the last one, 76,562, opens the road to the key long-term demand zone, which is obviously the one that we already got on our charts. That's everything from me for today. Thank you very much for watching this analysis. Please remember, this is the NFP Friday. Volatility might increase very, very rapidly during the data release. So please stay focused, stay vigilant, and I hope we will see each other next week. So take care and bye-bye.